welcome to the Mortgage Rate Weekly Market Update for the week of November 5th, 2018. Hello, I'm John Thomas with Prime Residential Mortgage to give you your update. Well, first of all, tomorrow is Election Day, November 6th. And if you haven't heard, I'm actually running for Newcastle County Council, District 5 seat. So if you are in the Newark area in District 5, please come out and vote for me. Now let's jump into the market report. Mortgage rates, unfortunately, have been moving higher since the end of August. Take a look at the bond chart on the screen. You can see the downturn there with the black line. Mortgage bonds been selling off since the end of August. And then unfortunately, on Friday, you can see the red line of support there. Mortgage bonds broke through that on Friday with that red candle. So the trend is still for mortgage bonds to sell off. Now, mortgage bonds are trying to recover, bouncing off the floor of support there. But if they break through that again, it's only going to get worse before it gets better. But with mortgage bonds trying to rally to start the week with the green candle right there bouncing off support, we're going to recommend carefully floating your mortgage rate to start the week. But if mortgage bonds start to sell off, because what's going to influence them is the U.S. Treasuries, they are trying to close below 3.19% on the yield. If they can do that, great news. We should see mortgage bonds move higher and rates move lower. But if they don't and they close above 3.19% and make a run to 3.25%, the next level for treasuries, that is going to cause a sell-off in mortgage bonds. You'll see interest rates move higher and we'll quickly switch to a locking stance. But you could carefully start the week floating to see if we can get a slightly better interest rate to lock in. Now, if we dig into the economic news, the big report last week was the jobs report for October 2018. The jobs report showed 250,000 jobs created, well above the 188,000 expected. There were no net revisions for the previous 2 months reports because they had up of 16 in one, down of 16 in the other, so that canceled out. The 3-month average for jobs has now moved up to 218,000. So that's very good for the job market, very good for the labor market. The unemployment rate remains steady at 3.7%, which is the lowest in nearly 50 years. That's showing pretty much most Americans that want to work or able to work are finding jobs. The labor force participation rate increased from 62.7% to 62.9%, again showing more people going back into the labor force. That's good news there. But the big news in the report that caused mortgage bonds to sell off on Friday was wage pressure inflation. So we saw the average hourly earnings increased significantly from 2.8% to 3.1% year over year. The average weekly earnings were up 0.5% to an 11-year high at 3.4% year over year. So that is showing that wages are going up. That's causing wage pressure inflation. Inflation is bad for bonds because it erodes the value of the bond. So that's why we saw a big sell-off, giant red candle on Friday, and that spiked interest rates high on Friday. Now, we also saw the other week a report on gross domestic product. The first reading of the third quarter came in at 3.5%. Now, the ideal range for GDP is 2.5 to 3%. So our economy is running above the ideal level, doing very well. That GDP report showed that consumer spending rose 4%, and that's the #1 indicator of economic growth is consumer spending. So that is good news there. Inflation as measured by the GDP surprisingly declined. So that is, we'll see if that continues. Then we saw weak initial jobless claims come out on Thursday. Claims dropped 2,000 claims to 214,000 claims for the week. Jobless claims remain at multi-decade lows as employers are holding on to good employees and firing people less. This is supported by the low unemployment rate of 3.7% and the increase in the LFPR. So labor market doing very well. Wage growth is up. Unemployment is down. Employers are holding on to good employees and looking for new ones to hire. So it's a great time to be working. Now in the housing news, S&P Case-Shiller Home Price Index for August 2018 rose 5.5% from the previous year of August 2017. Now this is down slightly from 5.9% in July, but this shows that home prices are still going up. The drop is only a slowdown at the rate at which homes are going up, but a home price appreciation of 5.5% is very good. It's below the 6%. That's where we like to see it. Between 4 and 6% is very sustainable, very good long term for your value of your home. So that was great news. So housing is not going down in value right now. Home prices are actually up 0.1% from July of 2018. Now, we saw new home sales for September 2018 fell 5.5% from August of 2018 to 553,000 units on an annualized basis. This is the fourth straight month of new home sales falling, which is in part due to rising mortgage rates and home prices. So both of those together has caused a slight slowdown in new home sales. We also have a big supply of new home sales. Inventory levels of new homes is at 7.1 months supply. Normal market is at 6 months. Now that's the opposite of existing homes we're going to see in a minute. Existing homes are still low inventory. So existing home sales for September 2018 declined 3.4% from August to 5.15 million units on an annualized basis. This was below expectations of 5.3 million units. But inventories still remain low at 4.4 months supply, well below the normal level of 6 months. The median existing home sale also rose 4.2% to $258,100 in September. So even though the number of sales is slowing, the real estate market is still doing good. Home prices are still being pushed up. So it's still a good time to buy. We still are projecting home prices to continue to go up the rest of this year. Now in the local news, the next first-time homebuyer seminar is Saturday, November 17th in Newark, Delaware at the Christiana Hilton Hotel from 10 a.m. to noon. And then the next one in Wilmington is Wednesday, November 26th from 6 p.m. to 8 p.m. at Independence Mall on Concord Pike. You can register for either one of those events, but give us a call in the office 302-703-0727 or online www.delawarehomebuyerSeminar.com. And then we are back in Maryland on Saturday, November 17th from 10 a.m. to noon in Edgewood, Maryland. And you can register for that event by calling us at 410-412-3319 or online www.marylandhomebuyerseminars.com. Look forward to seeing you guys next week.